Good morning, traders. Chris Buzz here with Traders Profit Compass with your morning look at markets for Wednesday, August 18th. This video may be a little bit longer, so make sure you run your player at 1.25x to make sure you get through it in an efficient manner. Taking a quick look at futures, I'm going to call it basically flat on equities. Oil's up about 0.5%, copper's down about 0.75%. Precious metals are flat. Macro, we've got a housing start number this morning, oil inventories. We've got a 20-year bond auction at 1 p.m., so that'll be something that can and has moved the needle before on rates. And we've got the FOMC minutes that comes out at 2 o'clock. I did have a question yesterday in the trading room, do we have to worry about FOMC minutes? And not trying to be too cute, but the answer is no unless it's yes. Most of the time it's a nothing burger. Those notes come out and nothing happens at all. But every once in a while, something is said or implied that catches the market off guard, and there's a reaction. So I think it's something that you can't predict. You just have to be aware of. So I don't think there's any kind of real trade around it at all. And then on the earnings front, we've got Target this morning, Lowe's, which will probably be closely watched because Home Depot did not have an earnings yesterday that was well received, even though their numbers were fine. Some of their I guess their retail traffic was down and their outlook was a little down. TJX, analog devices this afternoon, a couple big ones. We've got Nvidia after the bell and Cisco after the bell. Obviously, there's a few more out there. You can check the blog site for that little calendar. Usually gets the big names. But if you want a complete list, Earnings Whispers does a nice job aggregating all that stuff. Now, yesterday, I let you know midday that I've adopted more of a tactically defensive type posture. I took down a lot of risk, and really most of it revolves around my positioning. And maybe your positioning is totally different than mine, but I'll just share a little bit. The 10-year yield we had been watching really closely was in the down channel, then it ripped. And for me, a cross above 1.3% was the green light for cyclical value, industrial reopening type plays. And so, in here, I was getting long, Freeport McMoRan, what else? Steel names, what else? Actually, the tickers are escaping me right now. But anyways, banks, Citibank and KRE, the regional bank ETF. Well, when yields plunged back down, all those names are losers. So, I think this qualifies as a huge head fake. Of course, like I said, time frame is everything. I'm much more of a trader than a classic investor. So if I'm looking at 4 to 6 to 8 weeks out, and you get a move like this, you're going to lose a lot of money. So if you're more of a longer term, I'm bullish copper, then maybe you can be fine. So, trading is local. That means that, a guy on a weekly time frame has a different conclusion than a guy that's trying to do something a month out. That's my point. So what I wanted to say about that is, and I'm going to show you a bunch of slides. You do what's right for your portfolio. I'm doing my best to guide you, share my thoughts, let you know what I'm doing, but you all are each independent traders, and your time frames may be slightly different than mine. So don't let me, if I adopt a more defensive posture, that doesn't mean that if all your stuff is working, keep it. I would, and if all my stuff had been working, I probably wouldn't have sent out that note yesterday. But when I close a bunch of positions, I'm just going to let you know. So that's what I did. So yields have fallen, which means TLT is rising. Now our next pivot point is around 150. We had a strong day in the dollar yesterday, and when we go back to these scenarios, that's just not going to work for commodities. Falling yields and rising dollar, that's not going to work for commodities and reopening and banks and all that kind of stuff. It actually favors more of the tech trade. Now I want to get into some of these oscillators. I'd been telling you that they had been in the middle of the range, and they still are, but we've made a significant move down. We've gone from plus 20 to minus 30 on the New York oscillator, and my expectation is to come down here a little lower into the minus 60 or below range. If there's some added volatility, some follow-up selling, and I think that's going to be a great location to have a great risk reward on getting some longs, some fresh longs with some duration, because we caught this move just a few weeks ago. We got long down in here, and then we participated in the move back up, which was great, and I think we all did really, really well during that period. Here's the oscillator on the NASDAQ, and you can see here as well, we went from plus 10 to minus 43 in just a day or two. So we're actually getting, close to that minus 60, minus 90 range. And just like on the New York oscillator, we caught this move here back up again. So I got my eyes fixed on this oscillator again as it moves down into that high probability buy zone. And don't forget, we've got August expiration on Friday, and then the week after that, usually the week after OPEX, there's more of an opportunity for volatility in the market because of all that, all the positions and the gamma rolls off. So next week may be a time to look for this to move into that oversold area. Percent of stocks above the 50 has dropped back down. I was optimistic here at plus 55, like on the way up. Breadth is increasing, but we've pulled right back down under 50 again, so that's not so hot. We had a breakout in the VIX. We had talked about this a little earlier. I think it was either Friday or Monday. Down at support, we've broken through the trend line. We were up here in the mid-19s yesterday before they bought it back up in the afternoon and pushed it right under 18. But we're above the trend line, and any kind of further selling, this will obviously move back up. I think the line you really got to worry about is like 20, 25, 20 spot 75. You break out above 20, you're probably seeing some some red on the screen, I would imagine. Equal weight SPY down 0.75%, not that big a deal. You could see here that price came down, tagged the 20 EMA and recovered. So that was positive. We do have the bearish divergences in place. When we jump over to the SPY daily chart, we're up in the top of the top half of the channel. Again, here we tagged the 20 as well. They bought it up a little bit in the afternoon. So I think on a daily closing basis, as long as we're above 440, I think you're okay. That's the midpoint of this channel. Below 440 and certainly below 437.50, I think favors a move to the bottom of the channel. Moving over to the 2 hour, you can see here that we gap down, some selling pressure into 442, and then they bought it up in the afternoon yesterday, brought it back right back up to 444. So that is going to be a pivot for today. 444, here it is on the 30-minute chart. You can see that we've got the open gap above. So today, you can pivot off of this 444 level. See if you can get a move up to the gap. And then that would be a point where it is either rejected or the gap entry can be made. If you get long here, that would be a buy point for sure on a move above 445. Get into that gap, see if you can get a gap fill up to 447. Qs on the daily chart, just a wobble, flattened out. We've got bearish divergence here that we've been pointing out for several days. Why? Well, we're up at the highs, but we're losing momentum. Usually you want to see the chart look like this as we're going up in price. Rising RSI, rising PPO as price is rising. Now that we've kind of topped out on momentum and topped out on RSI, we see that price is still at the highs. So on a daily closing basis, I think if we're above 365, that's fine. You get into the 362s, then you're going to be looking at a tag of the 50 EMA down here at 357.50. And, it's been a while since we visited that. That was way back here in May when we undercut the 50. So we're sitting on the 20 EMA. You can see that right there at 365. I think the midpoint of the daily channel is going to be really important to watch. For more active traders, I think as long as you're above 365, you're fine. You can look for a move up to 367 where we've got the gap of a couple dollars. So if you got a little pullback into 365 that held, and then you could get long against that level and see if you get a move up to 367. If they take it up before, without any retrace, kind of tough to buy in here. You know what I always say, in the middle of the range, it's kind of hard. But if you get a move above 367 into a gap, that's definitely a buy with a target of 369, trying to close the gap. And here's the Qs on a 30-minute blow-up scale. One of the things that grabbed my attention on this chart is, we've got a series of lower lows, and we've actually, it's not as clean. I could easily just move this trend line up here and just draw it in. But we do have lower highs as well. Got a high, lower high, was still lower here. Right here was the outlier, and then lower. So we've just got to break out. That's the bottom line. We're in a little corrective period here. And we showed that on the daily chart. We just haven't had the horsepower to get out of this little channel yet. And as we move on to IWM, we've been watching this. I've commented on it a number of times. If cyclical's reopening, all that kind of stuff, regional banks are working, this should have broken out. This should have taken out 224 and move up towards the high side of the box. Didn't do that, went the other way. You can see that RSI is in its bearish regime. Same thing for PPO, and now it's putting in a little bear cross right at the 0 line. That's usually pretty negative for price. So what I'm looking at right here is for price to come down and at least tag this well, actually I moved that line. Looks like I moved it a little bit. I think it's really at 212, 211, 212, not up here at 213. I'm going to adjust that just looking at it right here. But I'm looking for a move to the bottom of the box where I can get a real objective entry for a long and see if we can get a move back up at least to the midpoint. That would probably correspond with the NIMO reading getting oversold. That was where we were back here, and then that was a decent trade up to the middle of the box on the last cycle. So I'm looking for that to repeat. And, then there's always a moment of truth at the bottom of the box where, if it breaks below, then we got bigger fish to fry. Here on the 2-hour chart, you see the open gaps we have above, and then the support layers below that line up with the bottom of the box. This little overshoot here was probably momentum driven. I really did not have any big level back here at 214 to gauge that entry, but be that as it may, coming back up, recapturing 215, you could have gotten long there, but I mean, price is pretty weak all day long on IWM. Quickly, if you're new to the channel, welcome. I really appreciate your time here. If you find the information helpful, why not hit the subscribe button and the alarm bell? You'll get all my video content. You'll be notified of that from YouTube. Also, if you go over to the show notes, there's a place there, a link where you can jump over to the website, drop in your email address, and then you'll register for all my content. Get my midday notes, afternoon notes, weekend notes. Whenever I send something out, trade ideas, you'll get that right in your email box. And you'll also get an invite to our trading room. We'd love to have you there. We've got a lot of new members, and we really have been enjoying their participation in the last several weeks. So I encourage you to do that. And longtime listeners, please pass the link along. I really appreciate your support, and it's helping me grow the channel, which I really appreciate. So moving on to FATMAAN. I mean, at one point yesterday, Facebook was down $10. Again, went in the gap and then failed. Right back down to support down here at 356. We're still inside the channel. And if you were a guy that got long, on this breakout here, you're probably still in, you should be still in the stock. We have not really had any big sell signals. I had been hoping for a gap fill here and was long, but when you lose $10 quickly and you're positioned only a couple weeks out, I mean, that's going to be a losing deal, and you can't really wait around for, well, it's going to bounce here. It very may well bounce, but your stops are going to be a lot tighter than $10. So I'm out of Facebook at the moment. If you're on the daily time frame, I think you're fine. You just got to hold the bottom of the channel here at 356. Apple is fine. Looked like they were really going to power it out yesterday. That was a very optimistic look right in the middle of the morning, but then they brought it all back, actually undercut the breakout here a little bit, and then recovered nicely. So a little volatile, but I still think Apple is fine. Tesla, they knocked pretty good yesterday, 3%. I've got the daily chart here. You know, again, time frame is everything, and depending on where you entered it, obviously makes a huge difference as well. But if you're just looking at the chart today, you could be long against 650 and look for a move to break through the trend line and then up to the gap, which is yet to be filled. Or you could say, look, you're below, you lost the trend line, right? I mean, if you were up in here hoping for that breakout, you probably got stopped out on this 3-day move from 720 down to 650. There's not a lot of people that can, sit through a $70 down move on Tesla. So I think here today, you got to break above the uptrend line, get above 690 and kind of do a reset here at this level, and then look for a move back up to 720 if the stock can stabilize. Microsoft, one of the stronger ones in the bunch. We got the breakout from 290. We had the back test on Monday. Let's see. Yeah, the breakout was Friday. This was Monday. We had the gap down yesterday, but they didn't really bring it down that far. Didn't even come back to 290. So this one still looks really good, holding its breakout in an uptrend with a roughly $2 gap to fill. I think you can toggle around 293 today. Anything above favors a gap fill. Anything below probably favors a move back to 292 on price. Amazon, aside from active intraday trading, which there's a couple of good Amazon traders in the room. I mean, this is on a sell signal, right? I mean, after earnings, it has not done anything except go down. Here's the daily chart, and we're way back in the middle of this $600 range, actually sitting right at the midpoint and sitting right on the 200 EMA. So it's really got to hold right here, 32.50, and anything below that, you've got to favor a move to the bottom of the box at 29.50. I mean, that's what we always say. Once you're out of a consolidation zone, you don't want to break out and then come back in, and that's what's happened here. And we've had a fast move down to the midpoint. Now, if you lose the midpoint, you're probably coming to the bottom of the whole range down at 29.50. So that one is not looking very good. And Google is fine. I'm not going to make a real big deal about this little fake breakout we had, but it is what it is. We're back in the range. This 27.15 has worked well as a support layer. If you lose 27.15, you're probably coming to the bottom of the box down here around 26.85-ish level. But for the longest time, Google has either been consolidating or going up. And I would be giving this one the benefit of the doubt unless you saw some kind of real big sell signal. And we just haven't had that in a real long time. Netflix is just building a base after this big gap fill move. Remember, we had a $35 gap. A lot of you caught most of that. Then got rejected at the top and came right back down to the bottom of the box, and has been oscillating between 508 and 522.50. If you get a breakout above 522.50, I think you can get long and look for higher. But right in here, it looks fairly choppy as it builds a base. One thing I was very disappointed to see and kind of influenced, what I want to do, and had, questions about positioning. I view semis as a very important, like canary in the coal mine, if you will, a good and important risk on, risk off sentiment type of gauge. We had been in this $35 consolidation range with a couple of fake breakouts. This one was showing every signs that it was real, and broke out here impulsively, which is what you want to see. And just for the last, well, you can see 1, 2, 3, 5, 7 or 8 sessions, it's been down almost every single day. And then yesterday dropped below this 258 breakout level and actually closed below the 50. So, I mean, that's not what you want to see in a risk-on type of a sector. And, NVIDIA will have a lot to say about that tonight after the bell, right? One of the bigger components in the index. I mean, if they knock it out of the park and they buy it up, maybe this thing just pops right above 258, and anybody looking back at the chart would say, oh, that's a fake breakdown, which it would be if we broke out above 258. So I'm going to be watching 258 closely. I was long semis in here and, got out of them after it started pulling back here, after it was apparent that, the breakout had stalled. So, but I won't hesitate to get back in again if it looks like semis are stabilizing, breaking back out above 258 and then 262. What I want to do right now quickly is, look at some of these sectors that also had a little influence on my positioning. This is XLB, the materials. Fake breakout. We were coming up, broke out above this. We had gotten, a lot of us got long down here in the 83 area when it broke this consolidation, came back for a back touch, and then broke out, but then has since fallen back. And, emblematic of that is, this is Southern Copper. You see the same thing on Freeport McMoRan and the copper space. Copper's been down almost every day on China growth concerns and strong dollar. So, moving up here to an important pivot level, broke above, and then just, came back to the 200 real quick. So that was definitely qualifies as a head fake. Energy hasn't done anything at all. Remember, the correlation is pretty strong between oil and SPY. If oil's going up, there's a good chance SPY is going to be going up, and we just haven't. The bid in oil has evaporated as COVID, the variant, Delta variant, has increased and have put that growth concern narrative back in the mix, and also on China slowdown worries. Here's the oil services ETF. I mean, not a very inspiring look. Could you get long here at support? Yeah, but there's nothing in the oil chart that will lead you to believe, a big bounce is coming. So just another kind of uninspiring sector. And moving on to solar ETFs, same thing. Big surge, and has been selling off and consolidating ever since. Trading below the 200. Not very inspiring. Not many charts in the solar arena look very inspiring. Financials, fake breakout, move back below. That was on the breakout of the on yields, the break above 1.3, and then this is the move back below. So here's the regional bank ETF. I got long right in here anticipating that breakout, and it was rejected. And that can be a lesson to you in your trading discipline. Resistance is resistance until it's broken. And whenever you try to front run a signal like I did, there's a distinct possibility that it just doesn't break out. And, one day I'll learn that you just wait for the breakout. What I was thinking is, rates have broken out, so banks are going to follow, and that just didn't happen. So, that was a loser from the get-go, as it got rejected here and did not break out. XLI broke out, and now we back tested it. We undercut it a little bit here at 104. I think on industrials, as long as 104 holds, it's okay. But a lot of bearish divergence here, right? With price near the highs. Here was the prior high. Here's this high, but at much lower momentum and much lower RSI. So that's something to watch. Technology, bearish, or should I say divergent high. We're here near the highs, momentum and RSI lower. That's bearish divergence. But as long as it's above 153, I think you're fine. We've been testing it here for quite a number of days as price has stalled out. But as long as it's above 153, I think you're fine. Below that, I think you're going to come down for a test of 150 here at the 50 EMA. Staples have worked great. Defensive sector. We haven't participated too much in this, but we did point it out in a recent sector highlights video that this was breaking out. So if you bought some, you're in good shape. You're on the upswing, and I think it looks good. One trade we did have was this Clorox with a bracket trade set up, and I know several people in the trading room have this. While the market has been a little turbulent in the last few days, Clorox grinds higher into this gap. So if you got or took the gap entry at 167.50, you're looking good here in the 171s, and see if you can go ahead and get this gap fill up to 180. And if the market remains a little on the turbulent side, I think the defensive sectors are going to continue to do well. And this has been one of our nice wins in XLV. We had gotten long way back here on the breakout above 125. And it's been, a nice steady grind higher. Most of you guys have rolled up twice since this breakout of 125. And, I think we rolled up here. And if I'm not mistaken, we rolled up again. But anyways, whether or not you're in it or not is kind of irrelevant. My point here is very defensive sector, and it's doing well. It continues to grind higher above the 8 and 20 day. That's always a good signal. Is this a sector I want to be in? And now we can drill down and see if there's anything inside of XLB that we want to grab. XLY, the opposite. Another offensive sector that just is not doing well. You can see falling RSI, falling momentum, price falling out of this rising wedge, and so now it's got much more of a sell slash short look than it does a long. I mean, it's got to hold this 177 area, or else it's down to 173, and then below that is the 200. And I've just got a couple charts here. Home builders, bad day at the office, down 3.54%. Fake breakout, break back below, sliced right through the 80 EMA, support, and the 20 EMA. Actually tagged the 50 yesterday in one fell swoop. So you can use 72 if you're trying to play the home builders as a pivot point. If it can recover that level, I think you can get long. But as it stands now, I think it's one to avoid. This is the XHB, where ITB is all pure home builders. This is more of a home improvement category. This has Home Depot and Lowe's in it. Home Depot reported yesterday, was down a lot. Lowe's reports this morning. So basically this whole thing is driven off of Lowe's and Home Depot. So you've got close to a double top look here. Here was a high. Didn't quite tag it here if you really want to nitpick it. But notice the bearish divergence, lower RSI, lower PPO on momentum, and now looks like it's starting to roll over. Got the 50 right here at near 75. Really needs to hold that, or it's going to come back to 71. Last slide for you, Target, which also happens to report this morning. I mean, just incredible move here. I mean, even just back in March, it was at 165, and now it's at 260. Had a nice rising wedge, and yesterday was a confirmed sell signal. Why? Because you closed below the wedge, you closed below the 20, and now you've got a pretty open path down to the 50. And I'm sure today, I mean, it's going to move on earnings. Have no idea which way. But if you get another red candle today and you get down in here towards the 50, you will have a good line. You can use that 50 EMA as either a level to get long or to shoot against on the downside. And I haven't put in the support levels down here below, but it looks like, something around 235 would definitely be in the cards if you lost the 50, and you've got the 200 way down here at 210. So longer video. I didn't spend a ton of time on each chart as I normally do. I had a lot of material that I wanted to get through, and I wanted to make this closing point. If any of you have read Market Wizards, the original one, the first one, you can look that book up on Amazon. There's a whole series of them. I like the first one the best. Market Wizards. They go through and profile, famous traders in history. And I remember this story about Paul Tudor Jones would, I'm not going to say regularly, but it wasn't uncommon for him to simply walk in on a random Monday morning and tell his assistant to close all the positions, take everything down to zero, and, having, his assistant say, well, what about this one? We just bought it last week. Sell it. And whether it's a feeling you have, whether it's you got a signal, a technical signal, or you just want to start from scratch and rebuild it, that's your prerogative as a trader. You don't have to answer to anyone. So you can close a position anytime you want for any reason or no reason. And so, always keep that in the back of your mind. There's no shame in saying, you know what, I kind of got all balled up here and I just want to start over. That's fine. Or everything could be going fine and you get a sell signal and you want to take profits. That's fine too. So I was in the wrong stuff, or a lot of the wrong stuff. I mean, stuff like Costco has been working. Healthcare has been working. We've had a lot of winners. And so, you don't have to, I didn't close those. They're winning. They're doing fine. It's just now my exposure. I've got a lot more cash available to deploy. And I really think getting caught up in the head fake of that cyclical move was regrettable. But we held off as long as we could. I had a level that I wanted to get in on that break above 1.3. Didn't end up holding. So we'll take it from here. I hope you didn't get caught up in that too badly. But we do have some nice winners: Microsoft, Costco, a few other names that have done really well. So we're holding our own. So what I'm going to be doing is watching this closely. What I'm actually probably going to do is stay real light through August OPEX and then see how the market handles next week, the week following August option expiration. And, then we've got Jackson Hole right behind that. So anyways, so that's where I'm at. I hope the commentary helped. I hope the video helped with the levels and everything. And I will be back at you soon, definitely tomorrow. But if there's anything today that I think is noteworthy or want to point out to you, or a particular setup, I will certainly pass it along your way. So until we speak again, my name is Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you soon.